Thanks for tuning in to our live weekly Facebook training where we discuss business credit building tips, tactics to get business loans and credit lines, and actionable business growth strategies. We're going live on Facebook starting in 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Going live now with your host, Ty Crandall.
All right, that was cool. Welcome, Facebook. Thanks for joining us. So this is the first time we use this intro video on Facebook's new app, which is called the Creator app. And we have a cool outro video that will trigger as well. Still some things we're working on here. We're still working on scheduling our streams and being able to access them. So far, we can successfully schedule our live Facebook streams, but when we try to access them to go live, we can't access them. So hopefully we'll get that fixed, but a lot of cool things to come here. So what we're talking about today is we're talking about something that most business owners don't know about, but you should. Hey, Tyrone, welcome. Thanks for coming in. We're talking about your bank credit score. That's right, your bank credit score. So here's the deal. As a business owner, you actually have three types of credit. You have consumer credit, which you're obviously familiar with. You also have business credit, or what's called commercial credit. You know about that because we use these chalkboards and these whiteboards here to talk about business credit all the time. And you also have a third kind of credit called bank credit. And this is a whole credit scoring system that determines whether you should or should not be issued bank credit cards, bank credit card, bank credit lines, and bank loans. So if you want to get the lowest interest rate, the longest term loans from banks, SBA loans, if you want to get credit lines from your bank, if you want to get credit cards from your banks, you need to know about this, because anytime you get any financing at a bank, they're pulling this secret, little known about bank credit score. So today what we're going to do is we're going to decode this thing. I'm going to teach you exactly what the bank credit score is, how the rating works, how the scoring works, and most importantly, what affects the score so you can actually make modifications and changes and actually get the best bank credit score you can to become lendable. So Prophetess, welcome. Thanks for coming in. So let's get to the chalkboard today. Okay, so today we're going to be decoding your bank credit score, the third type of credit that most business owners don't know about. I'm going to step over here and grab a Sharpie. I always like to have one of these in my hand. Okay, so that's what we're going to be talking about. The third type of credit that most business owners don't know about. So the bank rating is basically, we'll start here at the beginning. This is basically the total borrowing capacity that businesses can get from the banking system. It's also known as the bank rating, and thank you for the excellent info. I really, really appreciate it. So this is about the most money you can get from the banking system, and it's also known as the bank rating. Now, it's typically based on the main factor of average bank balance over the last 90-day period, okay? So the system's internal with the bank, you'll never see it. So a couple things we're going to talk about right away here. And Jerome, welcome. Thanks for coming. If I can hit the right button here to switch to me. So a couple things we're going to talk about here. First of all, the main factor of the bank rating system is how much money you keep in your bank account. And we'll talk a little bit more about it. What's nice about that is it's over a 90-day period. So this is something that, one, you don't even need to worry about unless you're going to get a financing, a credit card, a credit line, a bank or loan at your bank. If it's an alternative lender like On Deck or Balboa Capital or any of those, this doesn't matter. It only matters at conventional banks. Chase, Wells Fargo, Bank of America. Those are conventional banks. They offer SBA loans. The second thing that you need to know is that it's only, again, as I mentioned, over a 90-day period. So that means that 90 days before you go to get a loan, that's when you really want to focus on this balance that's in your bank account. So one of the main factors of this rating is how much money you keep in the bank account over the last 90 days, over the last 3 months. So before you go get a bank loan, you need to do what we're going to talk about in this stream. And if you do it more than 3 months in advance, then you can control exactly what your bank rating is. Okay. So that would be 4. All right, so here we go. So again, it's an internal system. You will never know what this score is. You will never see it. You will never know it. No banker will ever tell you really what your score is. So you're going to have to guesstimate what your score is based on what we're talking about today. Now, this is only used if you're getting a conventional bank loan. As I mentioned, it's not a loan. Okay, you can get loans on Deck. You can get loans at Balboa Capital. You can get loans from any of the online type banks. That's not what we're talking about. We're talking about conventional banks. These are the Bank of America, the Wells Fargo, the Chase, the big banks that issue SBA loans. It's not used for alternative financing, and it's not used for business credit. Building business credit. If you're getting loans using your revenue or collateral or cash flow, it doesn't matter. When it does matter is when you walk into your bank to get a credit card, when you walk in your bank to get a credit line, when you walk in your bank to get a loan, that's when this matters. Not through alternative lenders and not when it comes to business credit building. So let's talk about some tips here. First of all, you need to make sure that all of your business bank accounts show the same on all of your records. Okay, this is one of the problems that people have getting financing at the bank is that the information on their bank account statements isn't the same as everywhere else. So make sure your Secretary of State records, what you have with the IRS, what you have on your website, what you have online is the same as what your bank account statements say. The same name, the same address, that your bank has the same information that everybody else has. Why? Because they're doing the same checks. They're doing the same credibility checks to make sure that your business is legitimate, which means your business name, your business phone number, your fax number, your website, any information you list online should be the same everywhere, including on your bank statements. This is a big check that lenders use to make sure that you're credible to know if you're going to get approved. So again, this means the exact same, the same physical address, the same phone number, the same website, the same email address. You need to do that right from the start. So when we talk about bank ratings, these are ratings based on primarily on the average balance you keep in the bank account over the last 90 days. There's a lot of factors we're going to talk about here, but here's how it basically comes down. There's either a high 5, mid 5, or low 5 rating. There's a high 4, mid 4, and low 4 rating, okay? And somebody's saying, what's the phone number? I'm not sure what I'm talking about with the phone number is that your business's phone number that your bank has needs to be the same phone number that's listed with the Secretary of State on your website, etc. It all needs to be congruent to what I was referencing. So here's how the rating system works. High 5, mid 5, low 5. High 4, mid 4, low 4. 4s are unlendable. If you have a 4 score, you will not get a loan at a bank. You will not get a conventional bank loan. You have to have a high 5, mid 5, or low 5 to actually be lendable. The lower risk you are, the mid 5 or high 5 is the best. You get the best terms, you get the highest loan amounts, the higher you move up this scale. No phone number or to call you start. I'm not exactly sure what that question is, but if you re-ask it, I'll answer. Okay, so a high 5 means that over the last 90 days, 3 months, you keep an average of $70,000 or higher in your bank account over the last 90 days. Okay, that's exactly what a high 5 rating means. Okay, if you're looking to start the process, so you might be asking for our phone number. Here's our phone number, 877-600-2487. Joel, I am a registered agent for a client of mine, and with the Secretary of State, my address is theirs. It's okay to have the Secretary of State has a registered address on it. That's fine. A lot of Secretary of State records have the registered address. If the registered address is different than the primary, that's okay. But in a lot of cases, the business should have its primary address listed on those documents as the same one that's listed online. So 70,000 or higher puts you in a high 5 category, which means if you keep this much in your bank account over the last 90 days, you'll have the best bank rating you can get. If you have 40,000 to 70,000, you're a mid 5. If you have a 10,000 to 39,000 up to 40,000, you're low 5. So what this means is it means if you ever want to get a conventional bank loan, you have to keep $10,000 or more in your bank account for the last 90 days on average to be able to have this. Now this is on average. What that means is it means they're going to average what your bank balance was over those total in 90 days, and they're going to determine whether you're high 5, low 5, mid 5, high 4, mid 4, low 4. So whenever you want to get a bank loan from a big bank, you need to make sure you have at least $10,000 in your bank account, period. Don't put less than $10,000 in your bank account over 90 days. And remember, when you go from 10 to 40, you jump to a mid 5. When you go from 40 to 70 to a high 5. So it makes a bunch of sense before you get a bank loan to have as much money in your bank account over the last 3 months as possible to have that highest rating you can have. Now, under the 10 grand, 7,000 to 10 grand gives you a high 4. Mid 4 is 4,000 to 7,000. Low 4 is 1,000 to 4,000. It doesn't matter if you're low, mid, or high 4. None of these are good. All of these will fail you when it comes to getting a business bank loan. So you want to come in, if you're going to go to the big banks, you need to make sure you have at least 10,000 in your bank account. That's scraping bottom of what's acceptable. 40,000 moves you to even better term, and 10,000 or 70,000 or higher average balance puts you to the lowest risk you can get when it comes to bank. Now, again, there's a lot of other things that tie into this as well. It's not just based on this, although it primarily is. They're also looking at basically bank account management. So they're looking to make sure that you don't overdraw the bank account, that you don't have non-sufficient funds. And the more you have, the lower rating you're going to get. They're looking to make sure you have positive cash flow and positive monthly balance. What that means, positive cash flow means you simply have more money going in the account than you have coming out. They also want to see positive ending bank balances, which means at the end of the month when you get those statements that talks about your bank balance, that it's not negative, that it's positive. And remember, those positive bank balances are calculating in here as well. So even though this is the average you keep in the account over the last 90 days, the higher you can get your ending balance to be one of these three categories also makes you lower risk as well. They want to see you have consistent deposits. They don't want to see it sporadic. They don't want to see real estate agents that put 2 or 3 deposits in a month. They want to see regular, consistent deposits throughout the week. Okay, they're also looking at how long you've had your bank account, the age of your bank account too for the bank. So look, a lot of people ask me about shelf corporations, and you should never buy a shelf corporation, and here's why. First of all, when there's an ownership change in an entity, a lot of lenders look at when you open the bank account to determine your seasoning anyways, because they already suspect that you bought a shelf corporation. So they're a ripoff. They're not worth your money, because anybody that lends money knows what to look for. If they see an ownership change, they automatically look at your bank account open date to begin with. And when you're building business credit, when you're getting loans, in a lot of cases, they're going to ask you for bank references, which means they want a reference from somebody that you do your business banking with, which means you won't have that reference unless you have a business bank account. So when you set up your business, you need to set up a business bank account immediately, as soon as you set up the entity. I always do it as one process. I set up an entity with the Secretary of State. I get out my EIN number with the IRS. I set up my bank account. I always do those 3 things. I once did a test and I was able to get all 3 done in less than 50 minutes. I set up the entity. I got the EIN. I set up the bank account. And a lot of times you can set up business bank accounts with $25. So there's no reason that you don't want to set up a business bank account, especially since your account age ties into what your actual bank credit score is. They're also looking at bank products the business uses. What does this mean? They want to see you using more accounts than just one. They want to see you have multiple checking accounts. They want to see you have money market accounts. Any kind of accounts the bank offers you, try to make use of those accounts. Now, here's an important tip. Still have one primary account that all of your deposits go into, okay? All your deposits need to go into one account, because when you look at lending types like revenue lending that only looks at your bank deposits to determine how much money you'll be lent, they're only ever going to look at one account. So you need to make sure that all your money goes into one account. And my advice is don't make that the account that your debit card is linked to, because if somebody steals the debit card, you can have all kinds of fraud where all your money is. I have a second business bank account that we don't keep a bunch of money in, that we have a debit card for. So then that way we can keep $1,000, $2,000 there, use the debit card for that. If anybody steals a debit card, we're not really damaged, because again, it's a small amount of money that we keep in that account. So that's a good piece of advice. But you want to have all the money go into one bank account, then disperse it. Have a money market account. Have another checking account. The more accounts that you have, not 20 accounts, the more types of accounts that you're getting with the bank, the more they see that you're saving money with them, you're keeping money with them. They like that, and so they reward you with a higher bank rating. Philip, thanks for coming in. Thanks for saying hi. So again, the bank products you use, having different kind of bank products is a big deal. Having savings accounts with them, having investment accounts with them. These make a lot of sense, but you have Because a lot of these savings accounts, a lot of these money market accounts, they're not designed for you to keep pulling money out of them. So if you keep pulling money out of them, they'll assess all kinds of fees that you don't want to pay. So make sure that you talk to your banker about what you're trying to do. Look, I want to have some place that I can put my overflow money that's not in our primary account, and I think I'm going to pull money out 3, 4, 5 times a month. Tell them what you're trying to do and let them guide you on the best type of accounts you have. But they like money market accounts. They like savings accounts because these are typically accounts that you're keeping money in long term, which means you're keeping money invested with the bank, which of course they like to see because that's how banks make money, right? They take the money you invest with them and they invest it into all kinds of investments, and then that's how they get their rate of return. So they want you to keep money with them. So when you keep money with them and have savings accounts and you have investment accounts and you use other products that they offer, then that gives you the best all-around approach of having a good bank rating, okay? So seasoned accounts means that the bank knows your business, okay? So it's a very good idea to have these kind of relationships with your. I'll give you an example. Okay, we had a merchant account disaster last year. Okay, we had been with our merchant provider for 3 years. A new bank bought them out, and they just shut down our account. No notice. We just stopped having the ability to process credit cards. And it was really tougher than we thought it would be to get another account. But we went right to our bank, and ironically, because usually they haven't helped us in a lot of cases in the past, they immediately got us in touch with the person that handles merchant accounts, and they bailed us out. They got us a merchant account within days. So having our relationship with our bank really helped us to get out of a bad situation because we were able to quickly secure a merchant account as a result of this. So again, having a seasoned bank accounts, having a relationship with your bank really helps because they know your business. So when you need merchant accounts, when you need savings accounts and checking accounts and all these other different type of accounts, when you need the ability to accept checks and to process ACH, because you have this relationship, it really, really, really helps you, okay? So again, bank, if you're processing a loan application with the bank, if you have the bank rating, if you're going for an SBA loan, they're going to typically want a profit and loss statement. They're going to want tax returns. They're going to want a resume. They're going to want a application. They're going to want to know about other loans you have. They're going to want you to have good personal credit scores. They're going to want you to have good business credit scores. Bank loans are not for people that are not well established. Here's the best way I can explain it. When you can get financing, you can get financing if you have one of 3 strengths: cash flow, credit, or collateral. If you have one of those 3, you can get financing through alternative lenders like On Deck, for example, or Seek Capital for unsecured, or one of those type of lenders. If you have 2 of those 3, let's say good credit and cash flow, then you can get term loans. You can get lines of credit from alternative lenders. When you have all 3, when you have consistent cash flow per your tax returns, good personal credit, business credit, and bank credit, and you have collateral, which could be account receivables, inventory, equipment, or even your home on the personal side, that's when you get an SBA loan. That's when you can walk into bank and get a loan, when you have all 3 of those: cash flow, credit, collateral. So when they're going to want to verify that, they're going to ask for profit and loss statements, balance sheets, tax returns to verify your revenue. They're going to want proof of your collateral, aged account receivable reports, and detailed inventory breakdown. Okay, your house and details on your house with an appraisal, etc. If they use that, they're going to want proof of your credit, good consumer credit report. They're going to pull. They're going to pull business credit reports through Dun Bradstreet, Equifax, Experian. They're going to pull a FICO SBSS score from FICO, and then they're also going to come in and they're going to look at what your bank rating is, right? So they're looking at all this. So when you're going to get a business bank loan, keep in mind you're going to need the profit and loss, the tax returns, good business credit scores, good consumer credit scores. It all matters. It's all essential to get approved. Now keep in mind, most banks are offering SBA loans. Okay, some have niches on certain types of loans they offer, but they're almost all offering business loans. So again, if you want to research, and if a bank has a niche and it's your niche, well then you probably want to do business with that niche because that actually helps an even stronger relationship with them. Keep in mind, banks are government insured. They are required by our government to be very conservative with their risk. So what that means is it means that they can't lend money unless it's very, very, very little risk. Here's the problem. business owners inherently were risky to lend to because the majority of businesses fail. All the statistics support that. That is why banks issue SBA loans. SBA insures the loan about 90% in case of default. If the bank lends you $100 grand, SBA says, we'll cover 90 grand if that person defaults. They give me a loan for 100, I don't pay. SBA gives the bank 90 of the 100. It makes the risk to the bank so small that now it gets them into the business lending space. So remember, what I've told you about today doesn't matter for business credit. It doesn't matter for On Deck and for Balboa Capital and for all of these alternative lenders. It only matters when you're going to walk into a big bank like Chase, Bank of America, Regions, any of those type of banks, Wells Fargo, and get an actual bank loan or credit line, which is almost always an SBA loan or credit line. And at that point, you already have cash flow. You already have tax returns. You have a P&L and balance sheet. You have collateral. You have good personal credit, good business credit, good bank credit, or you wouldn't even be walking into your bank to apply. And remember, if you don't have those things, no worries. That's what business credit is based on. That's where you can build steps to get business credit. And that's where it gets you these high limit kind of revolving accounts. And then you can also focus on what we'll be covering in future streams called the 3 C's of lending. How to use revenue to get financing, how to use credit to get financing, how to use collateral and collateral only to get financing, okay? So again, keep in mind that what I'm telling you about today is exactly how you get money to bank. Next week, we're going to be diving in and talking about how anybody can get financing for a business, okay? We're going to be talking next week about how anyone can get money to start and grow a business. And we're going to go through and talk about a formula I call the 3 C's of lending, walk you through and teach you how to get money even when you don't have a good bank rating, even when you can't get money at your bank. So a quick run through overview. What we're talking about with bank credit is the capacity of the bank system, what you can borrow from the bank, period. It's primarily based on how much money you keep in your bank account. In order to be lendable, you need a low 5, which means $10,000 on average in your bank account over the next 90 days. Okay, that's what we're looking at. Remember, this system is internal. You're never going to know what this bank credit score is. You'll never see it. Only the bank's underwriters even ever see this score. And also keep in mind, this doesn't matter for alternative financing or business credit. It's only for the big bank loans. Remember, keep all the information on your bank account the bank has, the same as everywhere else online, your address, your phone number, your website, etc., etc. No, thank you, Rhonda. I appreciate you coming in. And remember, don't have non-sufficient funds. Don't overdraw your account. It adversely affects your bank rating. Put more money in your bank account than coming out. That will affect your bank rating. Have positive monthly balances, especially at the end of the month. Don't have negative. You want to have consistent deposits. Open your bank account as soon as you can because that all factors in. And get other products. Get savings accounts. Get money market accounts. Get investment accounts. But even if you do this, have all your money going into one account, then put the money out to the multiple accounts because that opens up more different kind of financing for you. Okay, and also don't forget that this really only matters if you're going to the bank to get a loan like SBA, and they're going to want cash flow credit collateral to. If not, then this doesn't matter. It only matters for the big bank loans. Alternative lenders and business credit sources aren't going to pull business credit. So I'm going to answer some questions and we'll wrap up. How many trades I need to get approved for Sam's Club? I'm not sure. I'd have to dive in a little bit deeper, but I think it's at least 10 accounts to get Sam's Club without a personal guarantee or credit check. I've seen some people, I think, pull it off with even 7. So I give you an idea where to go. Can you show your number again? Sure. Our number, if you have any questions about building business credit or getting financing, remember, we don't ever charge you a dime to get financing, is 877-600-2487. That's 877-600-2487. And now, on our live streams, when we wrap up, there'll be an outro video that'll give you a bunch of information, including this link as well. creditsuite.com/Facebook, where you can get a great free guide that maps out the step to build business credit. When I wrap up this video, there'll be a little outro video that lasts a matter of seconds that will give you that link as well. So thank you all very much for tuning in. Make sure you tune in next week where we're going to be talking about how anyone can get money to grow your business. We're going to talk about how you can get money based on your business strengths and how even if you don't have a business, you're still able to obtain business credit. If you missed any of this live stream, no worries. Go to our Facebook page, facebook.com/credit suite. You can watch this video in its entirety. It's powerful and information packed. I look forward to seeing you next week where we dive in and we talk about how anybody can get financing for their business through our 3 C's formula. Look forward to seeing you then. Thanks, everybody. Have a great day.
Please like and subscribe to get Credit Suite on Facebook for more live Facebook weekly training on getting money to grow your business and other business growth strategies. And don't forget to grab your free 4-step business credit building guide at creditsuite.com/Facebook.